Welcome to Electrified. It's your host, Dylan Loomis. So to kick off this Friday, we got this funny tweet from Martin Viecha. The chart he shared was from around 2019, and he said, new technologies take longer to come to market than most think, but adoption happens faster than most think. This chart from LMC Automotive predicted that Tesla would only sell around 400,000 EVs globally by 2025, coming in 4th place when it comes to the top EV manufacturers. And of course, by 2025, Tesla will be off of this chart, but even for this year, 2022, Tesla in reality is actually where they predicted VW to be in 2025. Next up, I'm sure most of you have heard by now, but Tesla is officially starting production of the Tesla Semi for customer deliveries going to Pepsi on December 1st of this year. Super exciting news, so naturally I went back and rewatched the Tesla Unveil event. There was one thing Elon said that I think everybody has forgotten about. Not sure if it will hold true, but if it does, it's a huge deal, and there are some other things to remind everyone of.
I don't want to hurt your eyes, but that's what a diesel truck looks like today. It's a clutter of third-party devices. It's very difficult to use. It requires integration, installation. These things don't talk to each other. It's a pain in the neck. It has significant add-on costs, whereas the Tesla Semi, all of this is included. It's included in every truck. Everything just works. And it'll seamlessly integrate with all the fleet systems, the things that are really important to the trucking industry.
So from a software and a hardware perspective, the Tesla Semi should help removing some of this clutter by integrating seamlessly with all of the fleet operating systems.
And perhaps most importantly, jackknifing is usually the worst nightmare of a trucker. How do you stop your vehicle from jackknifing if you're in difficult conditions? The truck will automatically stop jackknifing because it's got independent motors on each wheel, and it'll dynamically adjust the torque on each wheel so that jackknifing is impossible.
Now, at the end of this next part, let's see if you catch what I'm thinking about.
But we realized that the economics of trucking matter tremendously. If your cost per mile is too high, it doesn't make economic sense. You can't make it work. So we really thought about this a lot. We're guaranteeing a 7-cent kilowatt wholesale price. I want to be clear about that. This is real. These are real numbers, and it only gets better than this. This is a worst-case scenario.
Now, I know a lot has changed between now and back in 2017 when Tesla first guaranteed that 7-cent per kilowatt hour wholesale price. However, I will say many of the other things that were promised at the unveil are still true today. The 500 miles of range, the 0 to 60 times the cost, and many other things as well. So of course, maybe Tesla can't follow through with that. Promise. But if all megacharger stations are equipped with solar and battery energy storage, like they said would happen at the unveil, I do think it's within the realm of possibilities. Even if it's just for a period of time, maybe at launch to help drive adoption, just like Tesla used to do on the consumer side with free supercharging for certain vehicles. And one last thing I think we should all be reminded of.
A Tesla truck considered by itself beats other diesel trucks. But what if you have a convoy? So what if you have two trucks following? So you're more like a train driver. In fact, the convoy technology, the tracking technology, this is something that we are confident we can do today 10 times safer than a human driver. So I want to be clear, this is something we can do now. Now if you look at the economics of a truck convoy, now a diesel truck is twice as expensive as a Tesla Semi. It's not just economic suicide to use one diesel truck, it's economic suicide for rail. This beats rail. And that's I think, really quite profound.
And there are so many other things I think are going overlooked too. One, if you think about semis going down hills in real life, yes, they have air brakes, but they still have brake pads that need to be replaced. And that's a lot of wear and tear with all of that weight going downhill. When it comes to the Tesla Semi, of course, it will have regenerative braking. So when the Semi is going down the hill, not only is it not impacting the brake pads, but it's actually adding to the range. And Pepsi has confirmed the delivery date of December 1st this year and said we'll provide more details once we have taken delivery. It also should not be lost on any of us that the Tesla Semi could be eligible for up to $40,000 in incentives from the new Inflation Reduction Act. We should have a lot more detail and clarity when it comes to this by the end of this year. Here's a spreadsheet that's not mine. I found this online, but it lines up with everything that I have seen. Total reservations as of the end of 2021 should be in the neighborhood of around 1,000 for the Tesla Semi. So if Tesla starts producing this at a rate of around 5 per week, as you can see, they will be sold out for years to come. And remember, all of these reservations are before we've had any real world data to confirm the performance of this vehicle. So again, if it does well with Pepsi and the numbers are as Tesla is advertising, this list is going to explode. And finally, on the Tesla Semi, let's do what we can to ask some good questions when it comes to the Tesla Semi on the Q3 call. And of course, drop your most burning questions below so we can try to get it on the say list for the call on October 19th. Shifting gears to the stock market and Tesla stock, a lot of you know ordinarily I don't really care what happens day to day, but in this case, we can actually learn a lot because much of this decline is being driven by this report. For those of you that don't know, I actually went to school for finance and economics, so behind the electrified scenes, I'm loving this type of stuff, but I want to help bring some clarity to the situation. So we get this employment situation summary the first Friday of every month at 8:30 a.m. Eastern Standard Time, outside of Fridays that fall on a holiday. As you can tell by the market's reaction today, this is widely considered the most eagerly awaited news on the economy. The more people that work, the more they earn, and then the more they spend and ultimately propel the economy. Household spending accounts for more than 2/3 of the economy's total output. It's a huge report with a ton of data, but I'd say we focus on 3 main areas: the non-farm payroll number, the unemployment rate, and the wage growth. It's really important to understand where this data comes from. The monthly changes are actually measured from 2 sources: the household survey, which the government conducts via telephone and mail interviews, and the other is the establishment or the payroll survey, where companies are interviewed about recent changes in staffing. We get the unemployment rate from the household survey, where the government contacts 60,000 homes to ask employment questions, and the response rate usually comes in around 95%. But we should be aware the vulnerability with this data collection method is people may not always answer honestly. Think about if they're embarrassed about being unemployed or something like that. On the other hand, the establishment or the payroll survey is considered by many to be a better employment measure than the household survey because the info it gathers comes directly from businesses. The Bureau of Labor Statistics, or the BLS, contacts 440,000 corporate and governmental workplaces, employing around 50 million workers. This number makes up 1/3 of the total non-farm employment. As you could imagine, small businesses are often late with their responses, so we do have revisions to this data after the fact, and the response rate for this survey usually ends up around 85%. This survey tallies the number of jobs created or lost in the United States business and government sectors. So quickly, non-farm payroll employment increased by 263,000 in September, below expectations of 275,000. Right now, everything is tied back to the Federal Reserve and how this data will impact its future decisions. In this case, it's easy to think, well, the Fed wants the labor market to loosen, meaning less jobs available and more workers unemployed, because this will help slowing spending and should help to reduce inflation. So while the non-farm payroll number was lower than expected, which from a Federal Reserve perspective is good, the unemployment rate came in at 3.5%, or 20 basis points, 0.2%, below the 3.7% number last month. So again, from the Fed's perspective, the unemployment rate is going in the wrong direction. Yes, right now the Fed wants the unemployment rate to go up. So if you pair this metric with a low level of initial jobless claims like we talked about last week, the labor market is still tightening and strong, meaning the Fed gets more of a green light to keep raising rates aggressively to try to bring down inflation. The Fed has forecasted unemployment to rise to 4.4% next year, implying another 1.2 million people losing their jobs between now and then. This is the pain the Fed says is necessary to avoid even worse outcomes with inflation becoming ingrained. So yeah, as always, there are other factors at play too, but the main driver today is this employment situation report being good when the Fed actually needs it to be bad, because basically the Fed will continue to raise rates until inflation comes down or something breaks in the economy. And as always, with higher interest rates, the future cash flows of tech and growth companies like Tesla are worth less today, not even talking about all of the economic impacts from having higher interest rates, mainly borrowing costs. So remember, the macro environment is the trump card, and no, not the Donald variety, that impacts the stock market. And this is part of why I've been working on something behind the scenes the last few months that I'll announce here this month, so stay tuned. So to make that as simple as possible, the labor market is still strong, the unemployment rate is still low, giving the Fed the green light to continue raising interest rates aggressively. Good news from IDRA Group on YouTube. They did re-upload that video that they uploaded yesterday and then took down. That does confirm it looks like all of the testing is done. So this bad boy should be sent to Giga Austin in the coming weeks, because again, it could take up to 6 months to be assembled at Giga Austin to begin testing for the Cybertruck. Next up, according to some screenshots on Reddit, it looks like the Model S and X will be getting the new updated energy app that we talked about last week. Originally, it was just on the 3 and Y, but it looks like it's coming to the S and X as well. Next up, we have some very bullish EV comments from the Mercedes CEO. Ola Kalanius has said consumers, particularly in luxury segments, will insist on purely electric cars and SUVs sooner rather than later, and he said step by step we see the market turning toward EVs. The company has said it will have fully electric versions of all of its models by 2025, and that all of the new vehicle architectures it develops after that date will be electric only. When it comes to Mercedes EVs, he said pretty much everything is sold out for the year right now, and Mercedes has delivered around 31,000 EVs in the first half of this year. Next, we have a report from Drive Tesla Canada that Rivian is now going to charge customers for the towing if repairs are needed, even if something's under warranty, if there's no local repair shop. As of October 6th, Rivian is billing customers as much as $55 as a base fee plus $6.50 per mile. They give the example, if you're 200 miles away from a service center, that would cost you over $1,300 just for the transportation. As mentioned, this also applies for warranty repairs. Now, to be fair, this has not been made official by Rivian, but people are expecting an official announcement to follow in the coming weeks. Here we have a quick note about the upcoming EV tax credits and that detail that we're all awaiting. Now it looks like the Treasury Department is seeking public comment, which usually means the finalized version could be around the corner, and a White House advisor has said you will see some of this guidance out there before the end of the year. Next up, we get a press release from Polestar, my second favorite EV company. They said year to date, they've sold 30,400 cars, up 100% year over year. The company still expects to meet its 50,000 global volume target for 2022 by delivering the remaining roughly 20,000 vehicles in the fourth quarter alone. And don't forget about this bad boy set to make its debut next week. Shout out to Maximilian Missoni, who is Polestar's head of design, as he was named the Eurostar winner for design for multiple models for his work with Polestar. And lastly, I hope you all can go and enjoy your weekend and enjoy the gift that keeps on giving, that is the macro environment that's giving us long-term Tesla investors opportunities like this to acquire more ownership of the company. And I hope at least some of you are getting a little bit excited about understanding the macro situation better, lagging indicators, leading indicators, because if you can really understand that space well, you can start to forecast and foresee some of these things happening. Not at all trying to time the market when it comes to selling or anything like that, just maybe adjusting your dollar cost average amount when certain signals or thresholds are met. Again, stay tuned for an upcoming announcement. Hope you all have a wonderful weekend. Please like the video if you did, and a huge thank you to all of my Patreon supporters.